Welcome back to Investing and Trading Live. As always, my name is Josh Lilquist, and we are having a phenomenal time in studio here, talking about the different techniques and strategies in the markets, but how to have a timing strategy so you are no longer gambling in the financial markets. You now have a strategy to make smart investing decisions. We got into that in the first segment, and we did have a lot of people texting into this investing class local here at the Academy. So just text the word investing to the number 210-210 and come into one of these classes to see how these markets work, the timing strategy, so you can make those smart investing decisions. These classes are 2 hours. So when you text the word investing to the number 210-210, you're going to receive a text back right away. It'll say, "Welcome to Investing and Trading Live," and it will give you a link to our landing page so you can pick your own date. We do these classes during the week. We also have these classes on the weekend, so pretty much anybody can attend. Now, in the last segment, we were talking a little bit about what is a normal market? What are you doing for me now, not yesterday, or what might be you doing later? Is how do you time the markets now to make smart investing decisions, whether you want it to go up or if you want it to go down. It's called shorting, and that's a strategy to profit as markets go down. Now, one of the things I wanted to get into on this next segment here is I'm going to talk about news and social media and a lot of those things that people are following, especially making investing decisions. And here's a headline from, so this was Market Watch on July 6th. On Market Watch here is, Bed Bath & Beyond investors have spent $200 million trading worthless shares. Will this holding company help them up? This holding company they're talking about is Teddy Holdings. Mm-hmm. Now, the company filed for Chapter 11. So basically, and they were delisted from the exchange. Now, there's a Bed Bath & Beyond as BBBYQ and whatever. We don't have to talk a whole lot about it, but we have all this news article coming out, and it's going to draw people in to Bed Bath & Beyond or BBBYQ, whatever it is that's trading right now. And it's going to draw them into probably pouring more money into it, which potentially, could the market go up? It could. But could it go to zero? It's highly possible. Right. It's very, very low. Now, that being said, you want to have a strategy to time the market. And by doing that and following some of these different articles, especially people on Twitter and Reddit, who are you actually following? And what was in this article, it actually states a couple quotes from, I believe it's Twitter handles is what it is. Mm-hmm. And one of them is, "It's your time to shine under Teddy, BBBYQ. The other one is, the BBYQ stocks are stoked, and the sparklers are lit, and the fireworks are ready for celebration." And there was another one that said here, "Me and my buddy on the moon after Teddy." So, that being said, who are these people? I'm not going to name their names because they're really nobodies in my opinion. One of them has 782 followers. The other one has 2,200 followers. And the other one had, I believe it was around 800 followers. So these are just regular, everyday people that are saying this stock is going to go to the moon, in my opinion, in their words, right? So people follow this stuff, not knowing, this could be a 14-year-old kid in their mom's basement. It could be somebody that has never traded or invested before and saw a headline. So what they're trying to do is gain followers, gain viewership to their Twitter handle. Now think about that. People make those decisions based off of this stuff, and that is 100% gambling. Al, I want you to break that down a little bit and why we do things totally differently here at the Academy.
Well, first of all, let me talk about why people do what you just said. It's gambling. It's hope. It's hope. It's like going to a bar and buying a whole bunch of pull tabs and hoping that one has some money on it.
Yep.
That's what people are. They've heard about people that have made all this money betting on something like that, and they're hoping that they're going to be able to be that person because maybe they don't have enough money to invest in something that's worth $100,000 or $200,000, and they're thinking the only way I can make money in the market is to be able to have these big contracts, $100,000 worth of something or $200,000 worth of something.
And they get that, like you said, the pull tabs, that one $50 pull tab that keeps them coming back and buying more.
Right, exactly. But that's human nature. I mean, everybody. That's why so many people buy lottery tickets. You know, they're just hoping that they're going to be the one that wins. Someone's going to win. Maybe this will pay off. Maybe it won't. But the probabilities are not very good. If you're going to do something like that, if you're going to invest in something like that, that's money that you wouldn't mind just throwing away, because that could very easily happen there. That's not how we approach the markets. What we're looking for is probabilities. It's not big hits. The reason that most people fail is that they look at just the price, the profit that they can make, and they're going for the big hits. They're not looking at probabilities, and that's what will keep you successful over time. So the strategy that we use shows you how to identify something that has a high probability of working in the direction that you need it to go to benefit. I mean, 80% of price moves come through Wall Street, through the big money. People that, like Warren Buffett, Warren Buffett oftentimes will invest 10, 15, 20 billion dollars in one position.
You mean 80% of the money traded is by them?
Yeah, 80% of the activity.
Liquidity.
is the movement is caused by big institutions.
Yeah.
So if that's the case, and there was a way of following what they're going to do, because they're not going to call you in the morning and say, hey, this is Goldman Sachs, this is what we're doing today, this is Merrill Lynch, this is what we're doing today. But if you could find what they were doing, if there was a way to do that, wouldn't it be beneficial for you just to follow what they're doing?
Just to kind of clarify something there, people think, if their broker or their advisor says, hey, here's what we're doing, they're not necessarily moving the market. They're selling you a product.
Correct.
So don't follow that advice,
And
in my opinion.
oftentimes when a firm is pushing something, it might have been a company maybe that they brought public or that they want to do a secondary offering on. It may not be a great investment, but they have to pump it up in order to be able to follow through and finalize the deal they're working with.
Fees.
And sometimes you'll have a retail division and an institutional division. The institutional division might be doing something totally opposite than the retail division. But if you're going to use your money, if you're going to take control over some of your money, do it in a way where you are putting the odds in your favor of being successful. Our core strategy does that. And I mentioned before, if there was a way for you to find what the big money is doing, what the big players, the hedge funds, the big firms, the people like Warren Buffett, if there was a way of just following what they're doing, seeing what they're doing, and there is, and it's on a price chart, if you know how to read a price chart. Everything you need to know about a stock or an investment is on a candlestick price chart. We show you how to read that chart like a radiologist would read an X-ray or an MRI. They know what's on those X-rays. We don't, because we haven't been trained. That's what we do. We teach you how to look at a price chart, identify, even without knowing what it is a price chart of, and seeing whether there is a good point to make an investment there. May not be one. Maybe that price chart is telling you to stay away and then just go on to something else. But everything you need to know is there. If you know how to identify it, and then place a trade or an investment that gives you that low-risk entry, the high profit potential, and then the high probability of it working in your favor.
I don't know about you, Al, but I'm getting fired up. You're really painting a picture on what a lot of people do, what not to do, essentially, and then how do you add the odds and probabilities in your favor. And I really like how you're explaining that, because where you get those details is a price chart.
Absolutely.
And a price chart is a story. And just like anything we do in life, we can learn how to do things, but you have to be taught by people that have been doing it and have, been educating people for over 26 years as far as at Online Trading Academy. Now, if you want to learn that strategy, learn the techniques, especially be introduced to what they are, that way you can actually make your own decision if this is even right for you. Come on one of these classes. We have free investing classes to introduce you to some of these topics we're talking about. Just text the word investing to the number 210-210. Right now for 2 seats. When you do that, you'll get a text back. It'll say, welcome to Investing and Trading Live. It'll give you a link to our landing page. You got to click that link so you can come into one of these classes by picking your own date and time. So text the word investing right now to the number 210-210 from your mobile device. So, Al, you were talking about probabilities and odds. And one of the things that Online Trading Academy has is something called OTA picks. And there was an OTA pick here that I want to just kind of discuss real quick about how to have the odds in your favor and what that looks like on a price chart. And it was the ticker was Fedex, and the ticker symbol is FDX. And this is just a trading potential opportunity that Online Trading Academy supplies or gives to our students that has the odds. And then you have to put your own capital management in there. But it also trains you to see the same thing or see that institutional potential buying opportunities, which is in this case is a buying opportunity off that price chart. And by the way, there's no buying recommendation here. You want to do your own analysis and learn how to do that. But there's a potential area around the 236, 234 area, and it was a demand zone that we've supplied for our students. And this is what happens here is you kind of see how that actually works, has a risk management in there, why they're taking this trade or why this is a potential opportunity. But it really helps build consistency because one of the things we do here at the Academy is it's not like we're doing 20 different strategies like you'll see online. Everybody is doing that same core strategy. Why is it so important to be able to see this stuff and then be able to follow it and make your own decision?
Well, if the goal is to achieve quality positions, like I mentioned, a quality position, low risk, high profit potential, and high probability of it working in your favor, if those are the three goals that you have, then the strategy you use has to be a strategy that gets you to that point. That's the end point. Our core strategy is designed to do that with 6 steps that you follow no matter what you're trading, but it takes you from maybe the initial idea, is this a good trade? Here's a company I'm interested in. And then by the time you're through going through those 6 steps, you're going to say, oh, yeah, this is a good quality trade, or you know what, I need to pass on this one. It may be a great company, but right now is not the right time to get into that. So again, if you're interested in a quality trade, which you should be, that's what's going to give you. Josh mentioned the word consistency. That's one of the most important things is being consistent. It's not looking at how much money you can make, but learning a process that gets you that consistency. Once you do that, then you can scale things up. I mentioned earlier that a lot of people stay away from investing in some of the parts of the market. They're looking for that shortcut, that home run, which is kind of like the Bed Bath & Beyond example you used. Well, what if there was a way for you to have an investment that might be worth $100,000 or $200,000 or $300,000, but with only a small account, maybe a $2,000 account or $5,000 account? How can you do that? Well, come into the classes that Josh is going to be talking about. We'll show you how you can do that. You don't have to look for these, pie in the sky, maybe 1 out of 1,000 chance or opportunities in working in your favor kind of investments. These are things that have high probabilities of working with risk management, but a small account can control something, a multiple of it. And maybe $2,000 can allow you to be in something worth $100,000.
Yep.
That's all the big players are doing it. You can do it too. We'll show you how to do that.
Yep, the strategies are there. You just have to learn what they are and be introduced to that. And that's why we have these investing classes here at the Academy. And we'll talk about that in the next segment as well, Al, just to give some more information on that. But to see how that's done, to have the consistency, you need that timing strategy with the odds and probabilities in your favor. If you want to come in and check these out, just come in to one of these classes. They're about 2 hours. They're during the week. They're also on the weekend. And Al teaches these. I teach these as well. You can just text the word investing to the number 210 for 2 seats for this class. It's July here, summer heat, and the summer heat in the market is also here. Great opportunities in the markets. Text the word investing to the number 210 for 2 seats for this investing class locally here at the Academy, a physical place to go to learn how to trade and invest. Coming up next, stay tuned. We're going to talk about some of those leverage assets that Al was just alluding to, how to be more efficient with your capital and not just putting a whole bunch of money in a super cheap stock makes you feel great because you got hundreds or thousands of shares where those stocks potentially could do nothing. They're, in my opinion, they're $1 or they're 50 cents for a reason. So coming up next, let's talk about that leverage. Stay tuned. We will be right back. This is Josh and Al, Investing and Trading Live. We'll be right back.